Welcome back to the Schaefer's Market Mashup. Patrick Martin here on the last day of June, and we've got a familiar guest ready to complete our trilogy. Please welcome back Tony Battista of tastytrade.
Thank you so much for having me in front of your audience. I appreciate it. You're right. I cannot believe it's going to be July 1st. It's like the summer's over.
You know, I have something every weekend in July. So it's, as fast as June was, my July is about to be even quicker.
It's funny. We talk about when you're trading the U futures and even the S&Ps, you're already trading the SEP futures. It's like summer's over anyway when you roll from one future to the next.
Yeah, that's the biggest indicator of wow, this is moving quick. Like as soon as you see that SEP walk in, you're like, oh, geez.
Yep.
Now I do want to ask a couple of opening questions here. Did I see you on Twitter get called out for being an Italian grandpa with a wet washcloth on your head?
That is 100% true. Listen, I'm trying to become that someday, so I certainly embrace it. You can't take the spots off a leopard; they're all the way down to the skin. So even though you shave the hair, the spots are still there. So. Yeah, I guess that's going to be me someday.
Hey, as long as you embrace it. And look, they're making a Sopranos prequel, so it's perfect timing,
Tell me that doesn't look cool.
It could be either amazing or fall flat on its face. I think there is no in between.
That's Gandolfini's son.
Is it?
Yeah, the lead role. That's his son. Yeah.
That's pretty cool.
That's pretty cool. It's pretty cool. And the name is great. What is it? Something Saints, all the Saints of Newark or something. I don't know. I think it's just absolutely great.
Yeah, it's definitely something to keep an eye on.
Mm-hmm.
And then the other question I had, I was just randomly thinking this as I was doing the prep. I don't even know how the name tastytrade came about. And it's one of the more unique names in the finance world. And then the cherry logo. Curiosity got the better of me. What's the deal there?
Sure. I'll tell you the quick story. The abridged story is back when we were OEX traders. Tom Sosnoff and Scott Sheridan were going to go off the floor and start some other business, and they were using a code name just so that somebody wouldn't really talk about it. They just said tastytrade, and now tastytrade is really from every time some of the guys on the other side of the pit, like Tom Sosnoff and Scott Sheridan, and the guys on my side of the pit, every time they make a good trade, they would call it a tasty trade.
Okay.
So that's kind of how they came up with the name, and then they bought the URL like 15, 20 years ago. And the one thing that Tom took from TD Ameritrade when he closed the deal of selling Thinkorswim was he asked for the URL tastytrade, which he paid $9.95 for on GoDaddy, and they said, sure, you can have that. And
wow.
That's how we got the name tastytrade.
Best $10 ever spent.
Yep.
Well, let's jump into it. When we last spoke in February, the meme stocks were all the buzz. They kind of cooled off a little bit in the spring, and then they started heating back up with the summer.
Yeah.
Is there any connecting tissue to them beyond short squeeze potential? And I asked this because I was looking into Marin software, ticker MRIN, I think yesterday, and they didn't seem to have a whole lot of short covering potential. So are meme stocks evolving? What's the uniting thread between them all?
It's an excellent question, and I don't know if I have a good answer for you. I will say that, and again, it's only my own personal observation, that when the market gets a little bit, and by the market I mean the overall market, even the S&P 500, NASDAQ, gets a little bit softer, these meme stocks seem to become more in play and get a little bit more frothy. Mm-hmm. And if you've noticed lately, they've been kind of going sideways. Unless you say Bed Bath & Beyond is a meme stock now, what's a meme stock? Is a stock that goes higher these days that, looks like dog shit, is a meme stock. I don't know. It's a phenomenon that I think is great for the business because it's engaging a lot of people who would not have been involved in the market. I just hope that they evolve to the point where they start looking at, some good research from, either, publications like your own or look for, good or find good information on the internet like ours. There's just so much crap out there that, they could be disillusioned pretty quickly. So.
Yeah, and that's why I was a little confused seeing the lack of short covering potential with marin, because their core thesis of being a meme stock at first made sense of like, okay, find very heavily shorted stocks and go after them. That's contrarian in its basis, but now it almost seems like it's jumped the shark a little bit. So it's something to definitely watch going forward, I think, in the next 6 to 12 months.
Oh, I think so, and I don't think it'll ever go away. Like, I think it'll be part of the vernacular for perpetuity.
Mm-hmm.
I just think it'll, like you said, it'll evolve into something else. I think the moves will be a lot less exaggerated. It's just going to mature, and like anything that matures, same thing with cryptocurrency. As it matures, it becomes less frothy. It becomes more normal moves to its implied volatility.
Right. There's some nuance to it.
It finds its watermark. You know what I mean?
Mm-hmm. That makes sense. Well, we've talked, I think, in all of our episodes about this exploding exponential growth in options volume. I've got some stats here that Katie pulled up.
Sure.
Let's see. On a daily basis, back in 1981, 432,000 option contracts changed hands. In 2021, there are now 3.8 million equities with options available and 141,000 non-equity options. 39 million option contracts change hands on average on a daily basis. January 27th, 60 million options contracts changing hands. What is this? 825 million options last January. As a veteran of the field, what have you noticed during this explosion in popularity that might be getting overlooked?
Wow, overlooked. Man, I think information travels so quickly now that it's not that it gets overlooked. I think it just gets kind of underviewed.
Mm-hmm.
I'll put it to you that way. Just meaning that, you get like it's great that you just mentioned meme stocks for a moment. It's great that you've got so much volume in all of these options. And you know what? What they've realized now is stock is dead. And really, you need to maximize your buying power. And the only way to do that right now in the game is options until they create something else, which I can't see what else they could create in the world. And I think people have learned that. So I think when our parents, or maybe even us, when we started investing in the 1980s, you may have thought, stock, I'm going to buy stock. Mm-hmm. Then you realize, how many shares of stock can you buy, even if it's a $50 stock, with $5,000 that you may have, or $2,000 or $25,000. Now, today, with options and tight markets, computers, it makes it so easy where anybody can invest with, a couple of $100 can make, $200-$300 can act like $2,000-$3,000. Mm-hmm. $5,000 can act like $50,000 if you wanted to with options, which is so great.
Yeah, I think it's the lower cost of entry that is attracting so many people.
But you get the snake oil salesmen too that come out in full force, and I think people have gotten smart enough to kind of weed those out. The let me show you how to make $50,000 with starting with 50 cents is unreasonable these days.
Yeah, I can't remember what quote it was from whatever movie, but Inglourious Bastards. If there's a deal too good to be true, it ain't.
Right, that's right.
So that is important. But with this huge flood of of people coming in, I did an episode last week about the top 5 mistakes options traders make, mm-hmm. With 2 former traders. I went with a very Back to the Future-ish DeLorean references, going back in time to advise your younger self. Sure. With all this volume, I was thinking now it's almost like everyone's standing around on like the first day of school or training day for what, if you want to use another movie. Mm-hmm. So I figured I'd toss that over to you and say, what are the top 5 things that you would teach an options trader on day one?
Sure. Liquidity is king. That's something we kind of press all the time at tastytrade. And by pressing, you have to have a tight market. Mm-hmm. A lot of times somebody will come up with ABC stock that they heard about, or somebody thinks it's going to go higher, going to go lower. And if you don't have volume in the options, meaning not that there's volume that the stock is going to go higher or the stock is going to go lower, just volume that there's a good two-sided market, that you can put on a strategy, get in at a fair price, get out at a fair price. I think that's probably the major pitfall that people make. Now, they're making it a lot less by default because there is so much business that you were just mentioning a moment ago. So that's probably the biggest mistake that people make. I mean, top five is hard for me to come up with because I don't think that people make the type of mistakes that they used to make. I mean, before people weren't strategic centric. Like they if they wanted to buy a stock and they were using options, they just buy a far out of the money call. If they had $1,000, the call was trading for $1. That's where the public liked to hang out. That option that was trading for $1. I don't know if it was easy math or not, but that's where the public used to go to buy their option, was the dollar option. Today, they're a lot more sophisticated and better educated, and strategies become king. Getting hooked up into the hype is another thing. I mean, even as market makers on the floor of the exchange, we would gravitate towards the hype. Meaning, if there was a pit on the floor that was making a lot of noise, that meant there was a lot of volume. That meant that there was a lot of money coming into the pit. We would gravitate towards that stock, wanting to make markets in there. Because who wants to make markets when there's nothing going on and there's nobody playing? You want the volume. It all comes down to volume. Today, sometimes the retail investor can get caught up in the noise, like, what the neighbor's doing or what everybody else is doing, or what they read on Twitter or anything else like that, which you really got to take with a grain of salt.
But what happens if, what your neighbor is talking about happens to be where the volume is? I guess at that point, do you have to jump in, or do you really have to read a situation?
Oh, I think you have to jump in. Like, I think if you believe what the neighbor's saying, right? If it fits your assumption, if it doesn't, do the opposite, right? I don't care what you do. I think you have to jump in, but I think you have to jump in small. And I think the biggest mistake that retail investors make is they're all in basically in one stock or they're one play. I think retail investors take much more risk than anybody who is a quote-unquote sophisticated trader. By sophisticated trader, I just mean somebody who's been in the business a little bit longer and diversifies by strategy, as opposed to, I'm looking for this, I'm all in. Nobody stands. The days of pushing all your chips in and standing up from the poker table and saying I'm all in are over. Because this market, hasn't been moving as of late, but it moves too quick, too fast. It's too big to do that kind of thing. Okay,
so that's a good question. I can pivot then with, you talked about strategy. Sure. What are some strategies that retail options traders should use starting out?
So let's think about these. Let's think about these meme stocks. Okay, like you want to be bullish on AMC or whatever stock it is. It doesn't even matter what the stock is. You can go in and buy shares at $50 or $60 a share, or $10 or $12 a share, or you can use 70 to 80% less money, and buy like two 70 delta options, so they'd be just in the money. So two 70 delta options would give you 140 deltas. One delta equals one share of stock. So if I have 140 deltas, I have 140 shares of stock. Now I'm paying a debit for that. Go out and sell one 50 delta call. So now what you've done is you had 140 deltas, you're selling 50 deltas, you have 90 deltas, basically 100 deltas, 100 shares of stock, and you can do that for a very small debit, maybe $2, $10, $15, and you have 100 shares of stock with defined risk. Where you don't have defined risk when you just buy stock, meaning the stock goes to zero, that's your defined risk. In the plan that I just showed you, the stock goes under my 70 delta option, and I don't lose any more money wrapped around that delta. I'll just use Bed Bath & Beyond only because I had earnings today, and let's say you want to make a play in there. The stock is trading for $33. You could buy the 30, I'll make it easy. You could buy the 30 call and 2 times, and the stock is trading 33 and change. So one of the 33 and a half calls, that gives you 93 deltas, and you pay, let's say, $6 for that.
Mm-hmm.
So what do you have here? You have the 33 and a half call spread. The stock is 33. If the stock doesn't move, you're long the 33 and a half call spread one time. That's going to be worth $350. And you're long a 30 call one time, which is going to be worth $3.50. You break even. So your break even is basically it's a 50-50 shot. And to do this, you've paid a $6 debit. You're using $600 to control 100 shares of stock. That to control 100 shares of stock, it costs you well over $3,300 to control 100 shares of stock. My break even on this is $6 below where the stock is trading, where my long call is, which is 30. It's basically a 50-50 shot. And defined risk. Buying 2 in the money calls that have a 70 delta and selling 1 at the money call to kind of finance it, break it in half, gives you 50 deltas. Gives you 100 deltas, 50-50 shot.
And I think the most important thing for a retail trader to understand is the Greeks. I think that's the first thing that they should be learning on day one.
Totally. I mean, delta is shares. Theta is how much it costs you to hold this position. Like the position that I gave you, the theta decay is basically 0. The theta cost is basically 0. So it doesn't cost you anything to hold this trade. I mean, there's no decay to these options. My example before where I was showing, usually the retail customer buys the $1 option, that would be 39 call in July in BBY with the stock trading at 33. That's $6 higher. It has a delta of 25. So if the stock moves $1, that option should go up by 25 cents. The same process that I gave you, if the stock goes up by $1, this spread should go up and will go up by $1 because it's 100 deltas.
Right.
I mean, it's just giving you bang for your buck. And I think strategy is going to be and has been for quite some years the new way to trade, as opposed to finding what's going to go higher, what's going to go lower. People are so sophisticated now, whether you use charts or you use probabilities of success, it doesn't matter to me anymore. Now it comes down to what's the strategy? What strategy are you going to use with the amount of money you have to maximize your return?
Yeah, it's about control.
It's about control. It really is.
And you have almost too much control when you're trading options because there's so much you can do. There can be a little bit of information overload and analysis paralysis, I think.
Oh, for sure. And there's actually, it's so readily available too. I mean, I don't want to date myself, but, everybody has a computer in their pocket now. Mm-hmm. So, you can trade on the fly. You can trade anywhere you want. I mean, for some people without discipline, that's a dangerous thing.
Yes, I agree. And that, the computer in the pocket, which again blows my mind even as a millennial. We talked in February and then way back in August. A couple of my questions were very basic lead-ins like, is this growth here to stay? Well, I was going back listening and I thought to myself, well, duh, no shit. Like, yes, that volume is here to stay. In your words, I think you said in February, it's Super Bowl Sunday every day now.
Yes.
The internet was a paradigm shift. The pandemic was a paradigm shift. Mm-hmm. Who knows what the next one will be and when? It's impossible to gauge that. Right. But how can this interest in options maintain its momentum? And I think you already hinted at it, but I do want to hear your full answer.
Yeah, I don't think it can wane ever, only because it's too readily available. It's now on everybody's lips. It's no longer, even to a couple of years ago, options are too risky. You don't hear that bullshit anymore. Mm-hmm. Like you don't hear that. You know where you hear it now from? You hear it from like legislation, or you hear it from some lawsuit from somebody who's not happy with their broker. You don't hear it from the investor itself anymore. The investor itself isn't saying, "Hey, I want to trade stock because I own a physical product." We have NFTs now. We have cryptocurrency. It's just the game has completely changed, and those who think like our father's father, are being left behind.
Mm-hmm.
I mean, did you ever think you'd be trading a cryptocurrency? And do you want to know something? If they want cryptocurrencies to become mainstream, and I don't think they're mainstream yet, they've got to change the name, because there's a lot to a name. And it has to be crypto assets. Because as soon as you say cryptocurrency, then currency means government. And I'm not a government, I don't hate the government. That's not my play. But as soon as you say currency, the Fed, everyone else wants to think about, hey, I got to protect my own corner. I control currency. I control the dollar. I control the euro. I'm the Fed. I'm the government. I'm a European government. Once you make it an asset, it's not regulated anymore like it would be if it was a currency.
That's a really, really good way to look at it. Would it be like similar? Are you trying to think of it in the same way as almost like a real estate asset?
Exactly. I mean, it's a crypto asset. I mean, I think I'll be dead by the time it happens, but I mean, can you really feel that you'll use cryptocurrency to buy a car? I know you could have at one time, and I know there are other places that are gimmicking, but do you really think? I don't think that that's the way it's going to be. I think it's going to be an asset very much similar to what you said, real estate or collectible art or anything else like that.
Yeah, the NFT stuff, I still cannot wrap my head around.
I don't understand it at all.
They're selling plays like there's some famous Michael Jordan shot. They're selling that shot. I really need to do a deep dive into that, but I do feel like it will be an asset. And I think it's a lot easier to digest and unpack that way, as opposed to tying it to a currency that has been around for forever. That's a really good way of thinking about it. I have not thought of that before.
Yep.
Damn.
I'm telling you, it's a multi-million-dollar idea if you get it done.
Yeah, you just blew my mind.
You'll change the industry.
Yeah. Well, I always like to wrap up because you guys have tons of stuff going on over there. I looked, Tasty Works is buzzing. I think you guys, I saw you had some great review from somebody. Hit me up with some new updates. What do you guys got going on?
Well, I mean, I just mentioned cryptocurrency, so we do have cryptocurrency. We've got 13 coins on our site now on Tasty Works that you can trade, which is pretty cool. You can trade as little as $10 worth, or you can trade as much as I think the per order is about 150,000 per that you could buy. Only buy open for now. You can't sell short on crypto because of it being a currency and running into a little bit of regulation, but hopefully we'll get that changed someday soon. We just merged with IG Group, which is a 45-year-old firm out of the UK, which we were pretty excited about. We just closed that deal yesterday, actually, and announced it. So hopefully we'll be in 17 countries real soon with Tasty Works, our trading platform. And we'll bring Tasty Trade worldwide, continue to grow. A lot of exciting things going on, and of course we're thinking about going almost 24 hours a day with our programming, meaning all the free content that we push out and quantitative finance that we try to shove down everybody's throat.
Just in time for the Euros, right?
That's correct.
You guys inked that deal with a London-based firm, and then England goes ahead and beats Germany. I don't want to say it's a coincidence, but maybe.
I can neither confirm nor deny.
Yeah, there you go. Well, I mean, it was great to check in with you, Tony. I learned so much when you hop on. Be sure to check his stuff out, tastytrade.com, tastyworks.com. I'll throw the links into the bio. And then make sure to check out some of Schaefer's newsletters, Options Insight, market rundowns, recaps. We've got it all over there as well.
And I'll be quite frank with you. You can't get the type of information that you can get on Schaefer at Tasty Trade or Tasty Works. We don't dive deep into EBITDA, and we don't look at earnings forecast and all the stuff that you do. So the synergy is there between us, and I appreciate having the opportunity to put our math side of it, and obviously facilitating the trades through Tasty Works my chance to show you my brokerage firm, which was great.
Yeah, you guys take us to school every time, and I love it. Cheers, and we'll talk soon.
Thank you, brother. Appreciate it.
Take care.